Welcome to another episode of the Taste Media Group Intelligence Series. We are joined by Scott Martin, a returning guest from Kingsview Asset Management and Fox Business News contributor. Joining us, Scott, thanks again for taking time this year.
Thanks for having me back.
Awesome.
It's nice to be a returning guest.
The only one so far.
That's right, which means I didn't screw things up the first
No.
time, or you just needed somebody badly.
You delivered on the ratings. You delivered on ratings.
Thank you.
So just getting into it here, Scott, last year when you were on, you talked a lot to our audience, which is going to be primarily those in the creative space, marketing space, and really provided some great insight into the financial world, which is obviously where you come from.
Yeah.
But right now we're headed into fourth quarter. Can you kind of talk about what people should be preparing for as we head into the end of the year, just from a tax situation?
Yeah, the fourth quarter, Thatcher, is a big quarter, really, I think, in a lot of our lives, essentially, because of the planning nature that one, I think, should have when it comes to the end of the year. Not only are there holidays and parties to plan for, but frankly, in your financial life, again, if you're just starting out to maybe contributing to a 401k, maybe you're just starting out contributing to an IRA, maybe you just got married, maybe you're having a child by year end. There's a lot of things that our firm helps our clients think about more deeply when it comes to year end type things, like I mentioned on the investment side, or just like the family planning side.
And from the business standpoint, for those that have maybe started a business this year or running a business, what should you be doing maybe in terms of thinking of end of year write-offs, if you want to make any purchases to kind of make that bottom line maybe look a little less?
Yeah.
How should people kind of be handling that?
Yeah, so obviously work very closely with your accountant at these times because they can help you kind of help categorize some things and think about maybe, like you said, pulling forward some of those purchases into, say, the year 2018 versus 2019, especially given the tax changes that are afoot, given what was passed already and what's maybe some future changes that are coming. But yes, thinking about a 401k plan, for example, in the course of a business, or for somebody who maybe is working for themselves in self-employment, those are good things to think about when you're starting to defer money effectively and put money away for, say, a 401k or a simple IRA or a self-employment IRA. Things, Thatcher, that if you put away a certain amount of dollars, obviously those dollar amounts vary by what type of account you have. And if there's future questions like that, you can reach out to us more directly and we can talk about those things. But effectively, the idea is maxing out a lot of those amounts. Say in the case of a 401k, for example, one can put away up to $18,500 if you're under the age of 50 in 2018. If people don't check that amount over the course of a year, maybe they don't put away that maximum amount and therefore they don't get the max tax benefit, for example, on something like that.
So maybe the question would be, if you're a freelancer out there or you're in the creative space where, it's not always per se a regular salary amount, sometimes you get your, large amounts in,
Sure.
Sometimes you're waiting for money to come in. But when so let's say you are sitting on some cash at the end of the year, you finally get your clients to pay up. Can you just put in a bunch, like a larger amount into a 401k just as kind of like a cash dump?
Yeah, you can put them in lump sums, that's fine, depending on which account you have set up, whether it is an IRA or like say a single 401k. Your accountant or a firm like ours, Kingsview Asset Management, would help you figure out what the best kind of account setup would be for you. But yeah, I mean, the nice thing is if you do get paid, say irregularly, and you do get a dump of cash towards the end of the year, or you get a dump of cash every couple months, you can do those staggered kind of amounts. You don't have to say I have to do $50 every pay period or something like that. So the idea, though, is keeping in mind, say, the year-end number as far as December 31 for getting a lot of those deposits in, again, depending on what account it is. And then certainly, obviously, April 15th of next year, as we lead up into the tax filing date, to make sure that some other contributions are made by then, too, is important. Because if you don't get them in by those days, the IRS isn't going to let you take credit for that year. And then, therefore, like you mentioned earlier, you can't have the write-off for those amounts that you put in.
Yeah. So, pretty intense stuff there financially toward the end of the year. But in the long run, if you do start planning now, it's not too late. We're here in the beginning of Q4. For all those freelancers or creatives out there who aren't as versed in the financial world, like this information can hopefully go a long way in helping you. But then when we're talking about the investment, Scotty, it's been we're here fourth quarter. For the market, obviously it's been a good run.
Yeah.
From your perspective, though, going into fourth quarter, are there some of those retail stocks that maybe people should be looking at as we, we'll see maybe see those returns start to come through in Q1 19?
So some of the retail stocks have already started to bounce back a bit because they got absolutely crushed. Once Amazon and some of those other online names started really taking a lot of momentum. So the retail names got really trashed in like 2017, for example, and they've come back. So if you look at like Macy's and some of those big box retailers, Best Buy and some of those guys have started to get some footing. But, you know, just like everything now, a lot of things are online. We've talked a lot about this, you know, for some of the other things we discussed, which is, you know, a lot of things are going online. A lot of things are going to kind of those more efficient kind of websites and things where maybe some of the brick and mortar retail isn't exactly the best place to be. But with respect to the holiday shopping season, which I do think is going to be a good one, given that we mentioned this, you know, earlier about the 401k balances. 401k balances in the U.S. are at all-time highs as far as average balances. More people are contributing than ever before, and so people feel kind of wealthier just in general because of the fact the market's doing so well. So it's likely to be a pretty good holiday shopping season. At which point it probably will lift a lot of boats in the retail sector.
And just talking about the way it's been this year from your perspective, someone who's been doing this as long as you've been doing it, I mean, how have you been advising clients, or what can people out there, maybe some of the younger people out there that are watching this who are thinking like, hey, I want to kind of get into the stock market, like what's been your thoughts on this year and how things have been going up, and then sometimes it can get a little weird, and just like how would you summarize what's gone on?
And that's what makes a market, you know. I mean, that's one of the fun parts about my job, aside from working with clients very directly and helping them with very customized approaches on how we try to get them to invest and stay with the plan. The market acts differently all the time, you know, and the market takes a different attitude toward risk all the time. So certain news that may be affecting the markets on tariffs or, you know, trade with China treated the market very poorly in, say, like March and April and May of this year. And then in June, July, and August, the market didn't seem to care, which is fun because, you know, it just makes the market interesting because there's always these differing opinions that are making the prices be what they are. And it also makes it challenging, I guess, too. But so in that same vein, we try to really help people think through what they're doing when it comes to committing to an investment plan, whether it is, say, opening an IRA and staying on the course of putting in $10 a paycheck, 50, 25, whatever it is, whatever they're comfortable with, whatever their needs are. And then also thinking about other accounts they need to be establishing. Maybe you just had your first child and you can take advantage of some of the great, which sounds crazy, but the great tax benefits that the state of Illinois has to saving for a kid's education, especially for your child's education with the state of Illinois savings plans. So helping everybody kind of commit and plan and think about a roadmap or a game plan that they can stick to, because one of the hardest things, and I know this from, I know you're not going to believe this, being in the markets in this business 20 years almost, if you can believe it, just because my face, you know, looks very young, I think.
Which is why you're on TV.
That's right, yeah, right, which why maybe Fox keeps asking me back, is Thatcher, just making sure that you stay committed to the plan, because it's really hard mentally, just as a human, to see the markets going down and hearing the bad news and seeing the markets and the stock market and the reaction just very bad in the marketplace go down over time, and thinking, gosh, I got to keep putting money into this thing, right? Because if something that's not going up, it's not as fun to invest in it, certainly. But that's just part of the overall plan, because when the market is down is when you should be putting even more in if you can, because effectively you're getting cheaper prices, you know, and that tends to be times when the market tends to rebound. I mean, we've seen that in a lot of drawdowns in the past when the market does come back after it does drop. It always seems to hit newer highs. So it's just a matter of staying with that plan that people kind of need a lot of help with sometimes.
And just for those watching here on Facebook Live, we are with Scott Martin of Kingsview Asset Management and also a Fox Business News contributor. But we have him here on our show today, so this is big. This is great insight that you're providing for everyone, Scotty, out there. But just in terms of some of the people that will be watching this as well, like if you can give us like 2 tips for somebody who's like, hey, you know, I just don't even know where to start.
Yeah.
Like, what would you say?
So, well, one thing is check with your employer, because you mentioned some of the creatives out there are either working for themselves, or maybe they're affiliated with some other larger firm where maybe they are, depending on how they're compensated, may have access to some sort of retirement plan. There's a good chance that, you know, in the litany of hiring docs or things that you've received over the course of being at a firm or at a company, you know, there's something in there about some sort of benefit plan that they may have set up for you, or you may have access to. So it's always good to touch base with HR, human resources, to figure out, okay, what's available to me? At least so you know, like, what the lay of the land is, whether it's something that you can do right now or something you can think about, plan for, and so forth. If you're not, say, advantaged enough to have like an affiliation with a company like that has an employer plan, certainly look into the plans that you may have for yourself. So that could be talking to an accountant if you're using one for your tax filings. Maybe they have an idea as to what you can do for like an IRA IRA or a single 401k. Certainly you can call an advisor like myself and we can kind of walk through what the potential is for you to do. And just make sure that there's at least something out there for you, because there is, if you're making some gainful employment, if you're getting some sort of compensation, there typically is something that we can find for you that will help you get some sort of tax advantage,
and that's what,
savings or investments.
Yeah, and that's why I want to have you on the show here today, just to kind of tell people out that, because a lot of people that are freelancers, though, Scott, even on the other, further down the end of the spectrum are independent people, and their cash flow is not as regular as a lot of people's would be per se. So that's why I think it's great to be able to have you as a resource here. And as we wrap up here on the Taste Media Group Intelligence Series, Guy, your insight's always valued. You mentioned a company before, this little company called Amazon. Is Amazon almost becoming like evil?
Well, they're doing a lot, which, I think you're bound to break some eggs, right? I mean, you're bound to break some hearts too along the way. I mean, as you get into so many things that Amazon has now. I mean, the funny part about Amazon, and we talk a lot about this on Fox,
And I'm sorry, are they becoming perceived as evil?
Well, I'm sure, like anything, I mean, they're getting enough involvement in people's lives where, it feels like they're kind of taking over. I mean, everywhere you turn. It's funny because Amazon is not retail anymore. It started as this little book company out of like Jeff Bezos' garage. Is the CEO and really founder of Amazon, and now it's like, it's retail, but it's also technology because they have all the cloud services. They have a pretty big like marketing advertising department because all the ad opportunities that now you have on their sites. It's just one of those things where it's stepping in a lot of places. They bought Whole Foods, a grocery store, and now they're using those distribution centers. I mean, there's just a lot of things that Amazon's doing that I think, their long-term risk is it just gets so big and so kind of ever-present that maybe people don't want to use them anymore. Maybe the government steps in and tells them how to run their business, things like that. And it just becomes one of those things where you want to just focus on, as a company, I think, focus on what you're best at and what you're good at. And obviously that's a lot of things that they've done so far in their careers.
Well, what do you think? I mean, what do you think their weakness would be then, per se?
Well, I think they tend to bite off more than they can chew on certain things. Now, this is a company that's making about $30 billion a quarter in revenue, so they have money to spend. I mean, that's the scary part, is they're getting so big that at some point, when they get into many, many areas of the economy, that's when the government tends to, sniff around you a little bit more and be like, okay, is this, antitrust? Is it a monopoly? Is it hurting the consumer? Are they pressuring prices too much? Things like that.
But that's a pretty high threshold to have to find, right? I mean, the government has to really. It's a high threshold to say you're now a monopoly, especially in this day and age where it's like a gray area with what we saw with Google.
And that's sure, and they're still after Google on a lot of those things, and that's assuming the government figures out what really they want to do, right, and that they get anything right. But the reality is that Amazon is definitely, I think, providing a lot of value to our lives. I believe that a lot of the things that they've brought to the technology space, the cloud space, we've used Amazon Web Services at our firm, and they've done a great job. So a lot of times I feel like it's not, as they say, your father's monopoly, because they have increased access to products and they've helped consumers, get things off the internet and get things faster and better. And they frankly, in most cases, I think have pressured prices downward versus upward. So there's been some benefits that Amazon has brought.
And that's the main thing as we move into like this new world, obviously, that we're living in, is that it'll be hard, I think, moving forward for companies being declared monopolies because they're moving the prices down and they're not controlling it. Although when you move it down, sometimes I guess you could argue it makes it an unfair advantage that people can't enter the marketplace, but that's more up to the market to figure out and not the government.
It is, and that's the thing too, is if you look on Amazon, and there's other companies that are still succeeding. I mean, Walmart's doing a lot of online business. Etsy is another one that's doing a lot of online business.
But just real quick, when you talk about Walmart, because you and me have talked about this before, Walmart pivoted, but like 15 years ago, I remember when I was in college, Walmart was kind of like Amazon, where people were like, Walmart's putting Main Street out of business, where now, Amazon's kind of putting the people who put the Main Street out of business, because they're the brick and mortar out of business in a way. So yeah, I mean, it's going to be interesting. And you said Etsy as well.
Yeah, right. Etsy's another one. And let's just face it, there's things are going to change even further, over the next 10 years, right? So, there's going to be other companies that will emerge. Maybe Walmart buys. I mean, they bought a big company in India, Flipkart, which is basically kind of like a grocery delivery and things like that over there. I mean, they're trying to find other ways to get direct to the consumer, because that's really the big part, is getting to that last mile where you're delivering to the consumer is where a lot of these companies want to be. And that's frankly where a lot of the margins are left, where the money and the profit can be made.
Yeah, no, it's very interesting. Scott Martin again from Kingsview Asset Management. Any other final words here as we wrap up here?
Yeah, I mean, just one other thing, Thatcher, is, as you think about, we talked a lot about Q4, this is the fourth quarter, October till December, checking beneficiaries on IRAs. So if you have IRA accounts, 401k accounts, just make sure that beneficiaries effectively are set up so that if something does, gosh forbid, happen to you as a 401k participant, IRA holder, make sure the money's going to somebody that you want it to go to after your death, so to speak. And then also
kind of a morbid way to end up.
It is a very morbid way, but we've been very happy on this discussion. So there has to be some sort of reality
balance here.
And then lastly, just wills, estates, and things like that too. If you've increased your family, if you've expanded your family, gotten married maybe in the last year or so, just make sure that you have wills and healthcare power of attorneys and things set up so that people can take care of you when maybe you can't, or when you're not here. Let's say again, being morbid, it's just things are at least taken care of from a legal standpoint, so that, let's face it, man, relatives aren't fighting over the money that you left behind, and it's going to the right places that you want it to go to.
Great, that's great. Scott, thank you again for joining us. Thank you everybody for watching this fourth episode of the Taste Media Group Intelligence Series, and tune in next week when we will have another episode. Thanks a lot for watching.